Good afternoon. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the afternoon of Sunday, the 15th of June. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to shoot trading signals. Now, I've been planning to put a paywall on this, but to be honest, it's been really busy. And the market's now hotting up again. So what I'm doing is I'm delaying that till the 1st of July. So basically the next 3 or 4 webinars I won't apply to. And I will get organised in the meantime. Okay, it's just been end of university terms, and I've been collecting kids from school, and I've made 3 trips to various cities over the last few days. It's but that's largely done now, which is great. All right, great. In that case, let's get started. Okay, we saw some interesting weakness, and we've seen a particular potential game changer for the next few weeks in terms of the war that's broken out between Iran and Israel. Now, how important is this? Now, the question is, sometimes it's all a question of perception, really. A lot of the time, for instance, I remember a time in 2014 where the market was going up or down significantly on every breath of news from Ukraine, and then a couple of weeks later, there was no reaction at all. So it's all about the market perception of it rather than the news itself. But at the moment, it is looking serious, and we are potentially getting close to some support breaks, which could actually be pretty significant. But we will see. In the short term, what really caught my eye when we saw the initial decline on Thursday night was where it came down to on ES and NQ, and that was, just to mention, I've rolled CL, heating oil and gasoline into August. I've rolled ES, NQ, RTY, YM and KC into September, and SB rolled into October. That's 9. I'm probably going to be rolling another 7 or so next weekend. So it's just prime time. There's a couple of weeks sometimes where there's a huge number of rolls to do, and it's a lot of extra work, unfortunately. But anyway, I've sorted all those out, and obviously next weekend I'm going to be doing most of the others, and then there won't really be many rolls for a few weeks. Okay. Right, looking at ES, we're forming obviously a potential head and shoulders here, and if it goes straight down on Monday, that will break down and it'll have a target about here in the 58.12 area. Now this could take us below the daily middle band, which is important. I'll come to those on the daily charts. On NQ, we've got exactly the same. Target would be again pretty close to this 21,000 bigger picture support level. We'll see how that goes. But I'm wondering about breaks of the daily middle bands and potentially a major fail. I've been looking at the bull scenario here, and I was thinking if we could just have no news for a few weeks, relatively, then it had a shot. But the fact is, there is a lot wrong with the US economy here. The world economy is weakening. Everything's being cut back. The trade war's kind of a disaster. Really, the US economy really is frankly taking so many knocks that it's hard to see. Well, I think the news is ranging from the not at all good to the potentially very, very bad. So we'll see. It takes a while for the numbers to come through. It takes a while for the effects to come through. But I might just say, tourism's a big thing in the US. And I think an awful lot of people, across the pond there in Europe, are just thinking, well, if I need to submit my phone to the customs people in the US, and they check my social media for ideological purity before deciding whether or not I come into the country. I'm not going to the US, I'll go somewhere else. Because why should I put up with that? Also, why should I have the uncertainty about whether I can get in or not? Obviously, holidays and trips take a while to organise. And in the event that there is any sense of uncertainty, really beyond active gods and so on and so forth, then why would you go? So I think this is going to have a huge impact on tourism. I think one of the big export sectors in the US has been for a long time education. Obviously, that's under serious attack too. In terms of tariffs, it's not a big issue for the rest of the world. It's going to affect economic growth. It is an issue. But everyone else in the world is at trade war currently with the US. The US is at the trade war with everybody. Now, the only countries really which have the US as their largest trading partner are Canada and Mexico, and obviously this is a more serious issue for them, but it's a much less serious issue for everyone else. But the US, well, I think something 24% of its GDP is between imports and exports. They're at trade war with everybody, and that is chilling trade, no question about it. People are reviewing whether or not they want to buy from the US because they think the US is throwing its weight around. There's big boycotts brewing in, and big brewing in. Obviously, Canada's already got a very, very serious boycott. I mean, where really you can have things from the US which are half the price of the Canadian stuff next to it, and then the US stuff's just not selling. And that's actually spreading. There's an awful lot of the free world strongly supports Ukraine, and that's also prompting something of a boycott because the US is seen really as the friend of Vladimir Putin and not the friend of the rest of NATO. So whether or not that is entirely correct, who can say? But that's the perception. And as with the market, it's the perception mainly which is important. I think we're going to have a big problem with US trade over the next few months. And the thing is, the foreign students, that's also trade. Tourism, that's also trade. This is America's contact with the outside world and the money that flows both ways during that contact. I think this is a big issue, and I think if we see sufficient disruption from Israel and Iran here, I think we're going to miss my window when I thought this bullish stuff could happen, and potentially we are seeing the start of that here. So looking at RTY, no obvious topping pattern here, apart from the larger possible double top here, and I would note that, of course, we have a possible larger pattern here, and if this head and shoulders was to make its target, we would be getting down and completing the head potentially on a big head and shoulder pattern. On NQ, that's on NQ, exactly the same on ES. Looking at YM, we've got decent looking topping patterns forming here across the board. Now, I've got the head and shoulders that I've got on the YM chart. I'm thinking that it's broken down with a target potentially in the 41,500 area. Now, that's not just possible head and shoulder neckline support, that's possible level top support. So we'll see. We've got a possible 60-minute buy signal brewing here on YM, marginally, and we have a bit of positive divergence here, but I'm waiting to see what happens tomorrow and whether we start seeing some serious breaks, and I'll talk about the impact that could have on the bigger picture charts. Okay, ESTX and DAX, not a lot to say apart from obviously they've both had their last buy signal failed, but the thing I'm mainly watching here is on ESTX. You can see it's broken back below the monthly pivot, which is a big support level. The new weekly pivot is right next to it, so it's double resistance on the way back up, but this looks an awful lot like a break and conversion of the monthly pivot. Is it going to follow through to the downside? We will see. But this actually kind of looks like that on DAX as well, although we don't have the very nice looking back test. But if they break below the monthly pivots and they lose those monthly pivots, well, that's big. So we will see. All right, let's have a look at that on the bigger picture charts. Okay. On the ES chart, I've got the daily middle band down at 6,008. This obviously is the ES September chart now, so obviously the numbers have changed. So, but we've got we closed at 60.30, but the low of the day was at 59.79. So we saw a significant poke below the daily middle band. Now that held, but if it breaks, then that is the main support level from the April lows. So we haven't had any significant break. This is the most significant break we've seen of it. And obviously the daily close is what's important. It closed well back above it. If we start seeing closes below, then potentially we've got a topping pattern here, and we've got some serious topping patterns forming. In terms of the SPX chart, looks pretty much the same. We didn't get the negative divergence in the end. We went too high, and then we didn't get high enough to renew it. So we don't have anything. But you can see we got pretty close to the daily middle band there too. We closed at 59.76. I've got the daily middle band at 59.44. It's another 30 points below, but I am wondering if it might break. If it does break. Now, I've been looking at the pattern setups here. Honestly, there isn't a great pattern here. There really isn't. But is it enough? Well, with the topping pattern and with news, potentially yes. We do have a possible RSI 5 buy signal brewing here on the hourly chart. Sorry, I'm just going to draw a couple of lines because I was doing work on the others in terms of looking at the possible alternate trend lines here. That one's not good. That one's too low, really. But I have got one more option. Let's just have a quick look. That one's a player. So I'm just saying we've broken the rising support here. That means I can cancel out the other trend lines, and if we've got a rising wedge here, it's this one. So we'll see how that goes. We don't have a head and shoulders on here. Not meaningfully, I don't think, but we do have possible support down here in the 56, 57, 67 area, and by the time we've got down there, we obviously would have broken significantly through the daily middle band, which is key short-term support. I've been talking about this key short-term support, and that's what it is. We're not far off the highs here on the 15-minute chart, but yeah, I'd draw in that let's draw in that trend line here as well. Sorry, I was playing around with these quite a bit. Looking for. I was basically weighing up the odds of it actually heading straight down here, because this is a potential real market mover, is what we've seen. Actually, that's a lovely trend line. So that is the trend line, and that's the trend line that we're looking at for a breakdown here. And actually, it's not bad. We will see. In terms of NQ. Or the Qs rather. Let's have a look at the Qs on the daily. Again, we got pretty close to the daily middle band. I've got that at 523.56, and I am wondering if it's going to break down. Again, we lost divergence on the RSI 5, but we do have possible weak daily sell signals brewing on the RSI 14. Is it as nice a setup as I would like to see at a high? No. Does it sometimes not deliver that nice setup? Yes. So here, we haven't quite reached the trend line I was saying I'd like to see it test, make a low, and go up. Now, I'm thinking we may well hit this trend line. And then, of course, we still have the option of going up. But the question is, how hard, what's going to be happening in Iran and Israel? Is there a possibility that Iran actually has already developed a nuclear weapon and might potentially use it, which really would be good for markets? But basically, what's happening and what's the international reaction to it, what's the Iranian reaction to it, etc. This will be watched closely over the next week, and we have yet to see what impact that's going to have on the market, but the impact might be sizable. On the hourly chart, again, we got a possible RSI 5 buy signal brewing. On the 15-minute chart here, not a bad looking setup for a breakdown. We obviously haven't broken down below. Do we have a possible head and shoulders breaking down here? Yes, we do. It's not awesome. But it's not bad either. So let's just draw that in. Hang on, wait a second. Sorry, I think sometimes it's helpful for me to do stuff in front of you just to show you the process. But that would be the neckline. And it wouldn't have as big a target as the one on the NQ chart, but it's still respectable and could go lower. And mainly, I'm really watching for how does it do in terms of the daily middle band. If we start seeing sustained breaks below the daily middle bands, then we're potentially moving into a different phase entirely. Lose the bull scenario for the moment, and really, I think that's time sensitive. So if we lose it for long, we just might lose it altogether. So we will see. I think there's a lot of talk about, well, it's business as usual, and it was just a storm in a teacup. Actually, I think in this case, that's not true. I think a lot of the time that's been true. But here, I think we're looking at what looks likely to be an awful lot of fairly significant economic damage, all of which will take a while to come through. Now, that is something we need to wait and see. We'll see. Here, I've got the head and shoulders potentially breaking down slightly with a target in about the 513.5 area to 514 area. All right, looking at Dire. Dire, we actually broke below the daily middle band. Did we close below it? Just below it, yes. Now, waiting to see if that confirms on Ronnie, but that is, now it's not the first time we've been significantly below the daily middle band. We saw a break here. This is weaker, and it will mean more if we see this on the Qs or on SPX, but nonetheless, this is something to look at, particularly as we have such a nice looking double top here. Also, just throwing it out there in the event that things get really rough, we've got a potential bull flag forming here. If we make a lower high here, it could be A, B, C. Equally, this could be some kind of a triangle forming, or it could be that we're just falling short and coming down, and sometimes that's what happens. On the hourly chart, we've got a possible RSI 5 buy signal brewing on the hourly as well, and again, I was mentioning that we hadn't reached the trend line of support here, and we've now reached that and broken it. Do we have a decent looking rising wedge here? Again, it wouldn't be bad. It's not awesome, but it's not bad either. Possible RSI 14 buy signal brewing on the 15 minute. Do we have a head and shoulders that's broken down here? Well, arguably, actually, yes, we do. So hang on, let's draw that in too. And that is here. Actually, again, that's not bad. Right shoulder high, right shoulder heights, and so on. It's pretty decent, actually. And that too has broken down. And it's broken down with a target in the, hang on. That looks like the target is pretty much the same, and it's going to get up back to that main support level at 413.83. That looks more likely to be a head and shoulder neckline. Yeah, it's almost exactly there, actually. That looks more likely to be a head and shoulder neckline, but it could be a double top as well. But if we start seeing big head and shoulders forming here, then that's going to be a source of well, that will be something I'll be sitting up and taking pretty damn seriously. All right, looking at Nikkei. On IWM. IWM, we've seen a breakdown here. We've tested the daily middle band, but it's not yet broken. On the hourly chart, possible weak RSI 14 buy signal brewing. We've got possible RSI 5 buy signals brewing on the hourly charts. We've got those across the board here. Do we have a possible head and shoulders? No, not really. So nothing that would be pretty enough for me to actually draw the lines for it. We have broken below this rising support, and again, we've got a viable rising wedge resistance trend line, and I'm wondering whether this breakdown will hold. We will find out tomorrow. We'll find out when we see whether this the action from late last week follows through. But looking at the pattern set up here, it's certainly not awful. And the problem with the bull scenario that I was putting out, as I was mentioning, could I think, and when I first mentioned it in my post before last, I was saying, are there any reasons this might fail? And I said, really, it would be hard to know where to get started on an answer to that question. So if it is failing, due to basically just the improbability of the whole idea and the just gravity taking over, that wouldn't be altogether surprising. All right, looking at DAX. DAX, we already had a weak RSI 14 sell signal fixed, and we had an RSI 5 sell signal fixed. RSI 5 sell signal has made target, and we've seen the Europeans have been outperforming the Americans pretty much all year. This is the first real sign of weakness we've seen on DAX. It's broken the daily middle band, and it has, it basically gapped below and then closed below the daily lower band. That was a significant sign of weakness. Looking at Nikkei. Nikkei, we're also trying to break below the daily middle band. We didn't quite do it. We closed back above it. But do we have a potential level top here? Yeah, we do. And I'm wondering if that might deliver. Okay, but that's not the most interesting inflection point this week, and that is on DX. All right, let's have a look at DX. DX, we're pretty close to a retest, or we've actually retested, this low here. We've gone a little lower here, and we've got a potential overall on this chart. It's so large, it's very easy to miss. This is all a potential double bottom. If we were to see a sustained breakup over the 101.3 area, then this would have a target really in about the 105 to 105.5 area. This is something I think could happen. Let's have a quick look at the other currencies. And wait a second. All right, USD, we reached the resistance that I was looking at here, and it broke slightly over it. This is, again, a potential double top. Potential double top on GBP USD, although smaller. USD JPY, really not sure what's happening here. This could be a triangle forming, setting up a move lower, but we've basically got a huge inflection point here, and we're on it on DX, and I'll show you why that is on the daily chart. On USD CAD, possible bottoming action, nothing convincing, possible nice looking double top on Australian dollar, and possible less nice looking topping action on NZ. All right, let's have a look at, hang on, I'll just put that back into the right place. Okay, let's have a look at the bigger picture charts. Now, this is obviously a potential double bottom. And you can see here that we've got this falling megaphone. We saw a slight break up over here. We could be making the second low of a double bottom. It could head straight up from here. Do we have any daily positive divergence? No, we had some, but we actually lost it on this last move down. On the bigger picture chart here, this is the megaphone that broke down with a targeted retest to the low. But the real pattern here is the flag support that I drew in after we saw the fail here at 110.18. Now, if I have time, I'm going to do a post about this today on the bigger picture, because this is the really huge inflection point here, apart from the one on crypto, which is actually not insubstantial either. Okay, so here I drew this in, we came back and we touched this perfectly, and we're retesting it again. What is this? This is a very, very big inflection point. And it wouldn't be an immediate thing. If we broke below this trend line here, it could just be coming to touch this megaphone support here. And I've got that basically in the 96 area at the moment. But if we saw a break below that, then, well, then I'd be thinking that we might well have topped out, and we may not be heading back. This bull flag is suggesting we go back and retest 114.78. I got to say, I'm struggling a bit to see that, but I've seen some pretty wild retests in the past, and some of those have actually been on the dollar. So we'll see. But I think it's certainly on the table as a possibility. Sometimes a bull flag forms and then breaks down, or a bear flag forms and then breaks up, and it kind of becomes the topping pattern, or the bottoming pattern. So here, if we were to see a sustained breakdown, this would have a target, which would be in about the 80 area. Which would be a long way down. But in the event that we come down hard from this, what I'm thinking is the next area to look for support would probably be in the 70 to 80 area anyway. I'm wondering if we might head straight down there, or if we might reverse back up hard here and see a strong move up on the dollar, then to basically head back up and retest this 114.78 and probably make the second high of a double top. We will see. Do we have much in the way of signals here? We've got a possible weak RSI 14 buy signal brewing here on the weekly, possible RSI 5 buy signal here brewing on the weekly. We don't have anything on the monthly chart, but you can see, bigger picture, this is a rising megaphone. Sooner or later, this is likely to break down and deliver at least a retrace, and might head straight back entirely to the lows, which I think may well happen here. We'll see. But I'm thinking we could be starting that breakdown here, and we're pretty much exactly on the cusp of that reversal. In terms of the euro, this has a perfect bear flag, which is the mirror. And actually, given that this is only 57% of the US dollar index, they don't tend to have perfect mirror patterns. This is a perfect mirror pattern. And that strengthens the flags, but doesn't actually give us much of a clue which way they break. In terms of sell signals here, if this is going to head down and head to the lows, we've got a possible weak RSI 14 sell signal brewing here, and a possible RSI 5 sell signal brewing here on the weekly on euro. And again, that exactly mirrors what we're seeing on DX. On the daily chart, no current divergence, but obviously we've got a potential double top here, just as we've got a potential double bottom on DX. In terms of GBP, we've got a bear flag here too. Now, I'm a little bit skeptical about it getting back to 1.0384. That was a special low that mainly happened because the British Conservative Party elected a complete moron called Liz Truss as Prime Minister, and basically she, her entire period in office, I think, lasted 7 days because she's screwed the pitch so profoundly and quickly and completely. And while she was screwing that pitch, that's when the pound fell very rapidly down to this. I think it was already down about this level here, and it fell down to 1.0384. And then when she was kicked out, it went straight back up again. That was impressive. I'm skeptical about it getting down there, but it's always possible. In terms of the daily chart, no current divergence there. USD JPY. Could we see the USD JPY go up here? Yeah, and the pattern would certainly allow a retest of the high. We didn't quite see one here. The alternative would be that we're actually forming a slightly ugly looking head and shoulder pattern, but yeah, it's definitely on the cards. Could we head straight down? Yeah, we could, because we've got a potential head and shoulder pattern, which is the one here. So again, inflection point, not giving us much clue which way it's going to go. In terms of USD CAD, weekly, not giving us a lot. We do have a possible RSI 5 bicycle brewing. Do we have any possible reversal pattern here? Not really. Possible inverted head and shoulder neckline maybe with the resistance at 1.4016, but not an awful lot to work with. Australian dollar, keeping an open mind. If this breaks up, then it would be breaking up from this falling channel. Sooner or later, these do tend to break up, but I mean, if the dollar goes up and the US dollar goes down, then we'll head back to a retest of these lows in all probability. But it wouldn't be not sooner or later. This is likely to break up. At the moment, do we have a reversal pattern here? Yes, we got a partially formed large inverted head and shoulder pattern. NZUSD, very unimportant, not even part of the US dollar index, as the US Australian dollar isn't either, I don't think. But it kind of looks like a triangle here. So waiting to see how it develops, not particularly compelling. Okay, so that's where we are. Let's have a look at bonds. Okay, bonds. We saw a breakup on basically on the Iran-Israel news, and this could be a rather ugly IHS starting to break up with a target in the 118.24 to 26 area, or this could just be a larger bear flag which is formed which may well break down. I'm keeping an open mind, but one other thing I've been reading, and it's something that wasn't unexpected and I mentioned before, is that I said that the Fed was likely to strongly defend the 5% level on TYX, i.e. in 30-year yields, strongly defend that at 5% because if interest rates rise over that, potentially one, it costs the American government a further fortune in the costs on servicing their enormous debt, and two, it starts really hitting people where they live in terms of the cost to borrow money. And actually, I was wrong because it's not the Fed that started doing that; it's the Treasury. But I was thinking normally it would be the Fed, but for whatever reason that's being done. How long can that area be defended? I don't know. It depends how insane the policies are, really. All bets are off. We will see. But they are starting to defend that, and if they're successful in defending it, of course, that will bonds will tend higher. In terms of ZN, we broke down from this likely bear flag. We haven't made it back to the lows here, but we may well just be forming a larger flag here. At the moment, I'm not seeing anything convincing saying that there's going to be a big breakup. All right, let's have a look at bonds on the bigger picture. Okay, TNX. Let's start with TYX actually. Here, we've got a potential inverted head and shoulders, and it is completed forming. If it breaks up, we've got a target in the 95 area. If there is a bond crisis in the American market, which is something I've been talking about for the last 6-7 months, then basically a loss of confidence in the ability or the willingness of the US to eventually repay their debt or to come up with any kind of sustainable plan to repay their debt in due course. Then I think actually going up to 9.5 would be pretty reasonable. Certainly, in terms of the countries who owe as much as the Americans do, in terms of proportion of GDP, normally interest rates are really starting at about 6%. That 5% is very important. Lose it hard, and well, this could go a long way. So that is the main resistance here. And you can see at the moment, we've seen an almost perfect test. Now this does give us an almost perfect double top here. Am I seeing much reason for this to go down? No, not at the moment. But if the big beautiful bill fails, and a reaction is to come up with some sort of fiscally sustainable plan, and that passes, then actually, yeah, I could see this playing out. And the best way to get interest rates lower in the US is for the government to actually show some responsibility and some kind of a plan for the future in terms of repaying its debt and keeping the bond markets happy. At the moment, I don't think the bond markets think that anyone cares in the administration, or really particularly in the government. About keeping them happy and keeping them reassured, and that is one reason why interest rates have been trending up. All right, looking at the daily chart, no current divergence on TNX. Still wondering about the retest of the high that we have already seen on TYX, but it looks like obviously TYX would start needing to break resistance significantly to get back to it. Again, we have a large possible IHS forming. In terms of the daily chart, no current divergence. We will see. On the hourly chart, weak RSI 14 buy signal brewing, not something. We don't have any really strong indications of direction here. Looking at TLT, TLT, we've got this very large potential IHS forming. Now, as I said, if there is a wildly successful defense conducted by the Treasury in terms of buying bonds and pushing bond prices up, then this IHS might have a shot. Or if they come up with a sustainable plan for dealing with the debt and the bond market actually believes it, then I could see this IHS playing out. Otherwise, it's hard. But I've marked it in because it's there, and because while it is there, as I'll point out what I was doing with one of the oil charts, that while it is there, it needs to be taken seriously, and I need to be aware of it. Okay, in terms of the daily chart, no current divergence. Could this be a double bottom? No, I know it looks like one, but it's just too big. In terms of the hourly chart, no current divergence. This is a flag which is broken down. It is a potential level top. The lean here, I would have a significant lean here looking at the TLT chart for this going further down. We will see, or for a larger bear flag forming, which would later bring it down. But I'm thinking upside looks limited, but I could be mistaken. We shall see. All right, great. Let's have a look at oil. Now, oil obviously was the star of the show last week with a major spike higher. I have been saying that we could reach the target at 77. Now, we did actually reach that target, but we didn't reach it on the we haven't reached it on the continuous chart, because I think this is already rolled into August. So I rolled into August here, and I've done that on heating oil, and I've done that on RBOB. I haven't rolled NG yet, but we'll get to that in a minute. But this is a sustained break up. Now, I've got big resistance in the 80 area, 79 to 80. That's where it's all happening. If we see a sustained break beyond that, then I'd be thinking the next obvious target was 92, and I'll talk more about that. But we'll see. But at the moment, we've broken over 70. New week pivots to 69, 73. And at the moment, I think we've got oil fields burning. We've got war in the Middle East. It is really unclear when that might finish. And war, I've seen a few wars in the Middle East over the years and watched the reaction of oil to that. It's generally not been good. In terms of, is this a big reaction to war in the Middle East? By historical standards, actually, not yet. Really, we need to get over 90 for this to start looking disproportionate by historical standards. This might just be getting started. In terms of HO and RBOB, we had very nice looking bear flags forming, and they're dead. We have gone beyond them, so we'll see. Looking at NG rather. NG is holding below the monthly pivot, and as long as that continues to be the case, I'm leaning towards the short side. This is looking like a triangle forming, and if it is a triangle, then it's a bearish triangle. So we will see. All right, let's have a look at those on the bigger picture charts. Right, I left this channel on the WTech chart not because I really was expecting it to go higher. I was expecting it to go lower, but I left it on because it's a perfect channel. And because anything like that, I tend to leave on the charts just because they might still be in play. And this one clearly was in play. We haven't made it back to resistance yet, but I've got that resistance up at about the 77.5 area, and I'm wondering, well, I'm thinking actually at this stage, this was the 200 DMA, which we just blew straight through. I'm thinking that's the stage, that's kind of the next obvious target. I'm thinking we may well test that next week, and there's no at the moment there is no talk of a possible cessation of hostilities. They will be ongoing. That will cause some turbulence, particularly in petrochemicals. So we'll see. All right, looking at the daily chart here, that's the channel writ large, no current divergence. On the WTIC chart, I've redrawn this, and I've had a look at this, and I'm looking, is there a case that we've just made a significant low? And actually, The answer is yes. This wouldn't be a bad looking falling wedge. We have just broken over declining resistance, and we haven't just broken over declining resistance here, we've also broken over declining resistance on heating oil, only just, but nonetheless, and on gas oil. They've all broken over declining resistance. Could we be looking at a substantial retracement, which would probably go higher? In fact, on WTIC, I'd say the obvious target for such a retracement would be in about the 90 area. We've got, why am I interested in the 90 area? Well, it's partially because it's the 50% retracement, approximately, but it's also because I've got this possible inverted head and shoulder neckline or asymmetric double bottom resistance in the 92.48 area. Now, if we see it blow up into that area, then, well, we'll see how it goes, but that could get pretty interesting. In terms of how close that is to the 50%, looking at this 5606, that obviously is 36.4 above. Add that again, and you get to 128.8. 126.42. So really the 50% fib is in approximately the 91.91 area, approximately. So that's actually pretty close to the 50% fib. That's a very, very obvious target area, and I think we might be going there. We will see. Where have we got resistance? Well, on the monthly chart on WTIC, I have the 50 month moving average, and I've got that at 78.56. That's just below 80. On the weekly chart, we've got the 200 week moving average at 79.41. That again is just under 80. That is the key level I'm watching. And if we see it break over it, and obviously neither of those is a million miles away from this channel resistance I was showing on WTIC, then break up from here, break up over 80, and I think we've got a relatively clear run to 92, and I think it may well be heading there. We'll see. All right, in the short term, do we have any divergence on the daily charts? Not yet. Wouldn't be hard to develop some, but we'd need obviously a bit of a pullback, then retest the highs, but at the moment we've got nothing. We will see how it goes. All right, looking at natural gas, still leaning short. Obviously, for many, many reasons, including the fact that most of natural gas production, I think, is outside the Middle East. There's loads and loads. There's a lot in America. There's a lot in Canada. There's an awful lot in Europe itself, although there's still a fair amount in Russia. There's a huge amount which doesn't really come from the Middle East at all. So this isn't really affected by the Israel-Iran war. So I'm still leaning towards the short side. I'm not seeing any reason to change that. We did have a nice looking double bottom here, but at the moment that looks dead. So that obvious target was 5.75. And it's fell below it. In fact, actually, it's been trading below the weekly middle band for ages. I would be interested if that broke up. I've got that at 3.67 area, but at the moment, it's been holding pretty solidly below it. Nothing really on the daily chart. No really obvious pattern here. Kind of looks like a head and shoulders on the bigger picture. But when you look at it closely, it doesn't really. We will see. But I think at the moment we're below the weekly pivot. We're below the weekly middle band. I'm leaning towards the short side. And we're holding above the daily middle band at the moment. How long that will last, I don't know. We'll see. All right, looking at metals. Looking at GC. Well, is war good for gold? There's shit in the woods. It's war tends to be very good for gold and any flight to safety destinations. So I'm expecting to see a retest of the all-time high. We've already got a bull flag which is broken up here. We saw a bullish consolidation here. I'm liking the high retest. We've got a possible 60-minute sell signal brewing. We'll see. On silver, we've broken up over my first trend line. I've got a second trend line. I was looking at that closely, and I reckon that's in about 39 area. I think that looks like the next stop. I'm liking this to 39. Looking at palladium, we obviously saw a strong move up. I think we're seeing a retracement here. Nothing really compelling suggesting that's going to be more. Even platinum is retracing a bit here. Reached a possible head and shoulder neckline, and we finally, after two fails, had a sell signal, a decent formed sell signal, which actually made target. So maybe the headlong rush to the upside is finished, but we do have a serious breakout, which obviously remains. So I'm thinking this potentially opens up quite a lot of upside, and I'm watching with great interest, although I'm not really quite sure why this spike up out of this long consolidation happened, but it has happened. HG, I've been looking for a test of the support trend line here, and we've gone there and broken slightly through it. This may well be HG starting to break down towards a retest of this low here in the 4.45 area, and that would more or less looking everything which is obviously oil's got a special war in the Middle East exemption in terms of going down when demand drops, but I'm still expecting demand to drop. That's not going to be good for copper. That's not going to be good for lumber. Not going to be good for natural gas. So we will see, and it may not be that good for palladium or platinum either longer term. But at the moment, they've really been acting more like precious metals in recent weeks after many weeks of not doing that. All right, let's have a look at that on the bigger picture chart as well. Okay, gold. Nice looking bull flag, has broken up. Not that far from a retest of the high. I'm expecting to see that sooner rather than later. Looking at silver. Silver, we had this trend line here, and obviously we've gone through it. This could be a bearish overthrow. Do I think it is? No. I think we're heading up into the next resistance trend line, which I've looked at carefully, and I've got that in the 39 area, and it's a very nice trend line. Look at that lovely low here. Comes through here, comes through here. It's a beauty. It was always my preferred trend line, and I've had a really careful look at it, and it's still very much my preferred trend line. So I think this is heading to 39. We might hit some serious resistance there. We'll see how it goes. But this is silver starting to do what I thought it might do a year ago, and it didn't. It looks as though it's going to start catching up with gold. All right, looking up palladium. Palladium still, is this bottoming action? I don't know. Is this a bear flag forming? I don't know. Could be. In the short term, we are seeing a little upside action, but on the bigger picture, it's not a great deal. Platinum, on the other hand, has seen quite a lot. On the bigger picture, it's not really that impressive, but we have been in this compressing triangle range for a couple of years, and we've now broken up from it with force, and we've almost got back to this retest this high here at 1336. I'd quite like to see that go higher, but again, that could still be an overall bear flag forming. These platinum and palladium have tended to be more anchored in the real economy. I think if there's a move away from US assets, then that may change, and they may start behaving more as precious metals rather than industrial metals. But at the moment, that's not yet clearly the case. In terms of the daily chart, wow, what a move. We've got a weak RSI 5 sell signal fixed. Not sure how seriously to take it. It was a almost momentary divergence, really, but I think we're seeing a bit of a retracement here. We'll see how that goes. Looking at copper, we've still got a nice looking double top here, and on the bigger picture, I'm thinking this double top sooner or later is going to break down and play out. And I think that's got a pretty good shot at happening. I think this could be the start of it turning back down. Do we have some levels to watch in the meantime? Yeah, 4.75, that's the daily middle band, and we basically closed on it. That needs to break. And at that stage, I've got this rising support trend line, which should be the next really big target, and I've got that at about 4. We've also got, obviously not to be forgotten, the daily middle band, the 200 DMA at 4.45. That's a significant level, and at the moment, we're just above the 50. But it's mainly the trend line that I'm watching. I think it would probably go through the others. This 200 DMA, it hasn't got a huge history on this chart of holding well as a high or a low. On SPX, on many other charts it does. On this chart it does not. So I'm not looking at it particularly as an exact level, but this trend line is an exact level. And I'm thinking a break below here potentially really opens the downside. All right, looking at GDX, not a lot to say apart from we've still got RSI 14 sell signals fixed, and we've got a possible double top formed here. On GDX, am I thinking this has got much play to the downside? No, I think this will mainly probably go up with gold. We'll see. Do we have a nicer looking double top on GDXJ? Not quite. But we've still got an RSI 14 sell signal fixed. I'm thinking we might see a bit of retracement on both here, but afterwards I'm thinking they will head higher. All right, let's have a look at commodities, the other commodities. So let's have a look at KC. Right, KC, just roll this into September, of course. I'm leaning towards seeing a retest to low, and we haven't actually seen that retest yet. We came very close. Now, sometimes you don't see the full retest, and this could be a potential level bottom. We will see how that goes, but we'll see. It's possible that we go lower and we were just setting up an alternate resistance trend line. So keeping an open mind here. Sugar, we're in this falling wedge, and we keep having opportunities to set up lows and then just going down again. I've got more to say about this on the bigger picture, but I obviously do have this monster head and shoulders, which is broken down with a target significantly under 10. And that's what I'm concerned we might be heading towards. And this is one reason I've been saying for a while that on and off that this looks like a dangerous long in the longer term, because it might be going an awful lot lower. And we have a pattern which potentially is pointing a lot lower. All right, on cocoa, this looks like a bear flag. It has broken down, then it's back tested, and it looks like it's going to be continuing down into a retest of this low here in the 85.50 area. So watching that with interest. Looking at CT, this is a decent looking potential inverted shoulder neckline. Hasn't broken up yet, and obviously recent market action hasn't been particularly exciting for the last month and a half or so. So we'll see, but I think this has got a shot at breaking up. Lumber, this looks like a bear flag forming, and we have broken up slightly over the obvious flag resistance. We do have possible alternates, but I'm thinking this is likely in due course to be heading down again. So we shall see. On wheat, we've got a double top which is trying to break down and then has actually rejected more than half of the way back up to the high. This could be rejecting back up. We'll see. Honestly, a retest of the low would have been cleaner, but I was slightly skeptical. Looking at corn here, we've got a very nice looking potential inverse head and shoulders. It hasn't broken up yet, but I think it may well. If it does, it would have a target basically getting pretty close. Well, up into about the 462.5 area, I think. We're getting pretty close to this potential level bottom resistance in the 465 area. Looking at soy, nice break up. This is still a flag which is broken up with a target at a retest of the high, and I'm thinking we may be heading there. Looking at soybean oil, we saw a strong break up there, which looks a little thin, but nonetheless made it. So I am wondering whether this might be heading back up into retesting this high. In terms of this head and shoulders that broke down with a target in the 42.9 area, that has failed. So the obvious next move would actually be to go back up and retest this high in the 52.6 area. All right, looking at live cattle, I was saying that this rising wedge would probably break down. This might well be a bearish overthrow, and this would probably break down, and it's broken down. We've got a couple of possible options for head and shoulder neckline. My favorite one is the one at the monthly pivot at 209.04. But there's another technically better one down here at about the 205.15 area. All right, looking at lean hogs, this is a potential bearish overthrow as well. This one hasn't broken down yet. We've got a 60-minute sell signal, but at the moment it's trading sideways through it. We shall see. All right, let's have a look at those on the big picture charts. Okay, coffee. Coffee, I'm really keeping an open mind at this stage, but bigger picture, I'd love to see a retest of the high, but I'm very aware that by historical standards, this is very, very rich action indeed. I'm sorry, I just need to correct your trend line. So I wouldn't be that surprised to keep it going down. Do we have a decent setup to go one way or the other? Not yet. But we would get one potentially if we actually set up a reversal pattern here, which at the moment we haven't done. Retest that high, and maybe we'd have one. Now, sugar, we've definitely got a reversal pattern. This is a very large head and shoulders, which is broken down with a target basically in the 6.5 to 9 area. That's a long, long, long way down on sugar, and I've been talking about it since we were slightly breaking down, and we have continued down on it. I'm not seeing much sign of reversal. We could have set up some positive divergence there. We haven't. On the weekly chart, we haven't either. On the daily chart, we had some, and we just lost it. So the sell signal, RSI 14 sell signal, has basically reached the target now. So do we have a possible wedge here? Yes. Do we have any convincing support? No. Do we have any positive divergence? No. Do we have a general lean to the downside? Yes. Okay, cocoa. Again, by historical standards, this is very high. I'd love to see a retest of the high again. I'm skeptical about that happening. Do you have a nice looking little three touch trend line here? This could be one of the ugliest head and shoulder patterns I've ever seen, but I suspect it's a triangle forming. But I'm wondering, well, I'm keeping an open mind on this. Maybe we'll see retest for high, but that was a stretch to get there in the first place. I'm not sure we can get there again. All right, wheat. We got a potential double bottom here as part of a potential larger double bottom. I'm wondering if this might break up. We will see. I have been wondering whether we'd come down here and do a full retest of 49550. You don't always get that, and we may not get it here. On wheat, on the daily chart, this is confused in the short term, and I'm not really. It's hard to have a particular lean. The obvious thing would be pull, flag, and then lean higher. We'll see. All right, looking at corn. We had a nice looking rising wedge here, which broke down, of course. But we've got a possible weak RSI 5 buy signal brewing on the weekly. On the daily chart, we've got an RSI 5 buy signal fixed. We've got possible bottoming action here and quite a lot of positive divergence. Break over the daily middle band at 445.95, and this is looking pretty good to the upside. I'm thinking we may well see a significant move to the upside. On soy, I've been talking for a while about this. This is the only one that hadn't broken up from a falling wedge. This is soy reaching falling wedge resistance. And if we see a break up from here, then all three of them will have broken up from their falling wedges and have a pattern tilt to the upside. Now, I have been talked to a couple of times about, there's a lot of excess grain, and the grains are going to be struggling for that. But they have been struggling. They haven't been going down, but they really haven't particularly been going up. Sooner or later, this kind of setup generally requires a breakup. Not always, but usually. We'll see. But if we see a breakup from this wedge, then that will be all three of the grains which have broken up from big falling wedges that have taken years to form. In terms of the daily chart, nothing really to report. Testing the daily upper band at the moment. On cotton, nice looking falling wedge. Hasn't made it. Again, this is the other one, but this isn't a grain. This is a big long-term falling wedge from the 22 high, which hasn't broken up yet, and I'm waiting to see if it does. Obviously, cotton's going to have to move. You can see how the last 4 weeks, how basically they've been the tiny ranges it's been trading in. It's sooner or later it will wake up, and my lean is it'll probably go up. Lumber, this looks like a bear flag forming. Shorter term, no current negative divergence, getting a bit overbought on the RSI 5. We have been making some decent tracks to the upside. Is this a bear flag? Maybe. Bigger picture, it's a bear flag. Short term, I'm more skeptical. I am wondering if we might be heading back up into a higher high over this level here. We'll see how that goes. All right, great. In that case, that's a wrap. Watch out. I'll be trying to get a post out today on the US dollar and on crypto. Oh, just wanted to show you that. Crypto is looking pretty interesting. Now, I was showing you that dollar, the dollar setup as a almost perfect example of an inflection point. Here is another. Now, I was looking at the bull scenario here, but one thing I warned my friend Matt Gardner, who some of you know, on I think, one day last week, was I did say if we saw a fail at the middle band and we came back down to retest this low at 141.57, that would give us a very ominous looking completed head and shoulders that on a breakdown would have a target at a retest of the low in the 95.24 area. So I was warning, and I mentioned it a couple of times in the pre-market videos, I was warning that we had a decent looking bearish scenario that could start looking considerably better, and it's now looking considerably better. We did see a fail at the daily middle band, and we did come down and complete it, and I'm waiting to see what happens next. Could this do we have a larger possible IHS here, which looks pretty nice and could deliver a big bull scenario? Yes, we do. Is this a very nice looking head and shoulders which could break down and deliver a retest of this low here at 95? Yes, it is. This is a very, very, this is a lovely, picture postcard inflection point scenario where we've got bull and bear, and we're testing the level to determine which of those is likely to deliver. We shall see. Break and convert this next line here with a decent move down, and chances are we will go and test 95. Reject strongly back up, get up to 190 and break it, then we've got a decent shot getting into 280. It's really as simple as that. One or the other is of these scenarios is likely to play out. Which one? Who can say? But I wasn't happy to see this head and shoulders complete forming. I was warning about it before when we were up here, the potential consequences of failing at the daily middle band, and it failed at the daily middle band. Now, the daily middle band is now at 159.18. Break and convert that back to support, and this situation turns around. If we don't do that, though, I am wondering about a retest of this low here and 95.24. We shall see. All right, great. In that case, everyone take care, and I will catch you guys again on Wednesday. Take care.